The price of gold is surging, but is it too late to buy? How do you know if gold is still a good investment whenever you see this video? In this video, I'll show you how to value gold as an investment. Then I'll reveal 3 ways to buy gold, including one you should never use. We're talking should you buy gold today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, gold is up huge over the last year, but how do you know if it's a good investment right now? The price of that pretty little metal zoomed 13% last year for its best return in 5 years. Gold is already up 7% this year on that coronavirus scare, and Ray Dalio, manager of the world's largest hedge fund, thinks it could zoom 22% higher to $2,000 an ounce by the end of the year. In this video, I want to show you the factors that go into the price of gold so you can make that decision whenever you see the video. We'll cover both the supply and the demand picture, and I'll share 3 ways you can buy gold, including one I'm using right now. The video is in partnership with Vaulted, a platform that lets you invest directly in gold bars with insured storage in the Royal Canadian Mint or physical delivery right to your home. The gold is certified 99.99% pure, and it took me less than a minute to set up an account and buy my first gold bar. So I'll show you how to buy gold through the platform later in the video, but I'm also going to leave a link in the video description below for more information. Now, I've also added a clickable index in the video description below, so if you want to jump around to those supply and demand factors for gold. But first, I want to cover just real quick why you might consider having gold in your portfolio. Why you should buy gold as part of that investing strategy outside the potential for the returns that we've seen this year. So first is gold is a physical asset, so it's a store of value against inflation. That was hugely important in the 80s, not quite as much lately. And while inflation hasn't been a problem lately, with the central banks all but just dropping cash from a helicopter, that inflation protection could come back as critical in the future. Now, gold is also the ultimate safety asset when markets crash and investors just panic. Just look at what it's done this year and in those other periods of market weakness. The last 2 major bear markets saw the price of gold higher by 19% on average. Gold is the asset investors run to when they lose confidence in everything else. More than those safety sectors and stocks, more than bonds or cash, gold is where they go. That makes gold a great choice for that what if portion of your portfolio. What if inflation returns in a big way? What if the central bank money printing just devalues the dollar or other currencies? I don't know, what if a viral outbreak infects hundreds of thousands of people and grinds the economy to a halt? So let's look at the supply and demand factors that affect gold, how to determine if the price is going to go up or down, and if you should buy it as an investment. Then I'm going to show you those 3 ways to buy gold for your portfolio. Now, the supply side here is easy. The World Gold Council estimates that 190,000 tons of gold have been mined, with about 2/3 of that since 1950. Since gold is pretty much indestructible, virtually all the gold ever mined is still in circulation. And a bar chart of the supply here shows just how consistent this is. So every year, mine production adds about another 3,500 tons of gold, and 1,000 tons is recycled. So you're pretty much looking at a consistent supply growth of less than 2% each year. So with this consistency in supply, understanding gold prices is all about that demand. It's in these 4 primary uses: jewelry, technology, investment, and then that central bank buying that really drive the price of gold higher or lower. Now, short term, so from year to year, the price of gold is going to follow the changes in demand from these 4 uses. Longer term, the price is generally going to rise along with inflation and that constant addition of the new demand from jewelry, tech hardware, and government holdings. So to see why gold has been rising over this last year, we only have to look at these different users. Central banks have been big buyers over the last 10 consecutive years, and 2018 saw the largest purchases since Nixon closed the gold window in 1971. This is really where I see a lot of the price support for gold over the next decade. So especially China and Russia, but most of the central banks around the world are trying to diversify their reserves away from the US dollar. There's really no other reserve currency right now that's as stable, so they're increasingly turning to more gold. They're buying more gold for their reserves. Now, gold held by ETFs grew by over 400 tons last year to a record almost 2,900 tons, and investor demand has picked up on that global uncertainty. Lately, the investor demand has just skyrocketed from that coronavirus and stocks falling in the correction territory. Demand from technology is fairly consistent and really follows that general business cycle. More tech and electronic products created means more demand for gold as a conductor. In fact, jewelry is really the only demand driver where we saw a significant decrease last year, with demand lower by about 133 tons, really due to those higher prices. So knowing if gold is a good investment right now means looking at these factors, understanding the trends, and then just asking yourself if they're likely to increase or decrease in the future. So first we got central bank buying, and that's likely to increase. Relations between the US and China or Russia are pretty much at multi-decade lows, and governments are just rushing to diversify their reserves away from the dollar. Investment in gold is booming, and I think we're building to that momentum that brings even the hesitant investors back into it. Nation, who knows how bad this coronavirus is going to get, but it's not going to be the last of these scares, and this 10-year bull market isn't going to last forever. When all this falls apart, investors are going to be jumping back into gold like they have in every recession before it. Now, jewelry demand is generally rising with that growing middle class around the world, but this demand factor is probably going to be one of the weakest, simply because as the price of gold increases, people are going to be able to afford less jewelry. Now, gold used in electronics is what I think could really surprise the market, though. 5G and the Internet of Things is going to set off an explosion in electronics production, and that's going to mean increased demand. So we now know how to value gold, how to watch these factors in the price to see if it's a good investment. Now I want to show you 3 ways investors are using to buy gold, 2 that you should consider, and 1 that is the worst decision you can make. And one of the most familiar ways to invest in gold is through shares of gold miners and then shares of the Spider Gold Shares ETF, ticker GLD. I usually prefer investing in the gold miners because you get that dividend yield, even if the payouts aren't great for a lot of these companies. You get an ownership share of a company that's creating earnings and then distributing that for cash return. If we look at the VanEck Gold Miners Fund, that's ticker GDX, we see a dividend yield of just 0.66% for the industry, so nothing that's going to make you rich. Now the problem here is that these miners will often underperform the straight return on the price of gold. The companies have to deal with geopolitical issues, mining, and really everything else that comes with running a company, and that can mean losses. For example, if you look at this chart of Newmont Mining, the world's largest gold miner, in green here, against the Spider Gold Shares in red, we see that Newmont has underperformed the return on the price of gold for most of the last 2 years. Now, if you can time that investment just right, these can be great plays. I recommended Eldorado Gold, ticker EGO, as one of my favorite penny stocks in April of last year, just before the shares jumped 118% by September. So investing in gold miners can pay off, but you never get that physical ownership of gold, the kind that protects you from the worst of those what-if scenarios. For that, another way to invest is through platforms like Vaulted. I met their chief operations officer last year at a conference and was immediately interested. The Vaulted app is managed by the McAlvany Financial Group and the International Collectors Associates, with over 48 years of advising clients in gold and precious metals. When you buy gold on the app, you're buying actual gold bars of 99.99% purity held in an account at the Royal Canadian Mint. Now, this is the actual vault used by the Canadian government and audited every single year. It took less than a minute to set up my account and then link my bank account. Once I transferred some money, I could buy gold or even gift gold to someone else. The gold is held in insured vaults at the mint until you sell or take physical delivery. Delivered bars are insured and sent by FedEx. Now, there is a 1.8% charge for buying and selling the gold in Vaulted, but they're totally transparent about it and still less than I've seen on other physical gold buying sites. Now, I'm going to do a detailed review of Vaulted in another video, but I'm going to leave a link in the description for more information. So our third way to buy gold, and really the worst way imaginable, is to buy gold jewelry. I used to see this a lot in 2012, and it seems to be coming back. The biggest problem here, besides just all the scams out there, is that jewelry gold can be as little as 37% gold, with even traces of copper and zinc in it. Now, beyond that problem of purity and just the outright fake gold out there, you've also got to worry about losing your jewelry or just getting it stolen. Investing in gold and wearing nice jewelry should be totally separate things, so keep it that way. Click on the video to the right for a detailed look into buying gold as an investment, how to analyze gold stocks, and buy physical gold. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.